And Lou is writing down the answer.
Snoopy knows who that was.
Well, I was going to say, that's very good.
That's a big hint. That is a big wrong hint. Yeah.
That's right.
I wrote it down to keep it secret.
From the famous Paul Revere and the Raiders famous song.
Yeah.
Very good. That's right. And we'll be right back.
That went from a
You're
Google
not gonna-
search to a layup.
You are not going to let him get away with calling him the Red Baron. His name was Baron von Richthofen. You better make
what was
them
his
answer.
What was his middle name?
I don't know.
Vaughn.
No. He was from Richthofen.
P-A-U-D-H-N, right?
Like Rick Vaughn, the big.
So do you have his middle name?
Manfred. The Red Baron, Baron Manfred von Richthofen.
No. Manfred's his first name. Von Richthofen is his last name. Believe it or not.
What's his middle
Oh, you're right.
They don't
I
have it.
apologize. You're right,
What's that?
because Baron is not really his name.
Baron's a title.
That's
Manfred's a
You're
first name, and
absolutely
von
right.
Richthofen is just a last name. It's like
You're right.
like some of those Dutch guys or D something
Yeah.
or Van Piercy or Van
Or
this.
Van
Heusen.
Just
Yeah,
means
Van
from.
Heusen.
Fawn means from. That's it.
That's very, very
F-V-O-N. Fawn.
You're so
Right.
fun to have around here.
Well, I'm a history major,
Let's-
dude.
got it.
It's like our oil companies are Kretzu.
OPEC.
They conspire together
Right.
to fix
And
prices.
oligopoly.
Oligopoly, yes.
Oligopoly. I like that.
Remember that?
Hey,
Pure competition?
When-
I remember
when
that.
they raise gas, like the same day 20 cents, you know that's not what they paid for the stuff in the ground.
Of
That's
course
what
not.
kills
Oh, it's so manipulative.
Yeah.
Oh, no, and they're paying somebody in Chicago at the futures trading, to jerk around the price so they can make more money. I mean,
Oh, it's,
the
they
highest
control it
profit
from the front to the back to the market.
ridiculous. Okay, so, do you want to stick around? Do you have time? We're going to be talking other stuff, and you can chime in with questions and stuff if you want.
You know what? Can I make a phone call real quick before we start again?
Yeah.
You've got 8 seconds. Go ahead. Can you make it that? I'm just kidding.
Physical cliff.
Okay, so we'll go with these, and then remind me for the last segment. We'll
Yeah,
do
yeah,
that
that's,
one. That'd be good.
that's fine. I don't
Okay.
need a bunch of time, but I thought I'd bring something.
Okay.
Mark didn't bring anything. I thought I'd step in for him. Harlow,
He
interesting.
had a feeling that I was going to
I thought he was gonna
just
roll.
show up.
Just wing.
He's
it.
rolling in on a Friday. He's like, it's tough tequila Thursday, and I got
Tough tequila Thursday.
I was out speaking last night, actually.
Really?
Yeah, I was out.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt of Pacific Private Money and Lou Botmall of LPL Financial. And when we cut to the second commercial break, we asked this trivia question: what was the name of the German ace who was famous for his expertise in dogfights, shooting down 80 planes? And of course, we're talking World War I. And what was the answer?
Snoopy?
Snoopy? No, Snoopy shot him down in the Paul
Peanuts.
Revere and the Raiders famous song.
Curse you!
Curse
Red
you!
Baron.
Red Baron, that's right,
Yes.
the Red
And
Baron.
what was his full name? Her real
Baron-
name. We were talking about that off the air.
Baron Manfred von Richthofen.
Yeah, that guy was pretty much nails, huh?
Oh, he
was
was
Top.
nails.
He was Top Gun before
He
there
was
was
Top
Top
Gun.
Gun.
Yeah, absolutely.
Listen,
He was Tom Cruise before he was Tom Cruise.
Yeah, that's right. Well, he was in one of those biplanes. I've been in one of those things. That is scary stuff. Okay, we are going to get right into email time here. And Mark, the email we received from a listener asks, what are the current interest rates that you charge borrowers, and how much do your investors earn?
We originate loans to real estate investors, usually short-term loans, 12 months, sometimes 6 months, and we fund those loans through our growing list of just regular people who have savings. Oftentimes it's through their self-directed IRAs. If you have a self-directed IRA, you can invest in alternative asset classes that include making loans, making trust deed secured loans as they call it, which is what we do, or you can even buy real estate in your IRA. So we have two types of clients. We've got our borrower clients who come to us for short-term loans, and then we've got our lender or investor clients who put their money to good use because they can earn returns of averaging 8 to 10% annualized interest-only payments on their invested funds. And again, this is short-term, so we're not asking them to commit, for 3, 5, 7 years. This is usually a 1 to 2 year commitment for a loan to a real estate investor whose exit strategy is probably to sell the property. So that's how you generally get
Or
paid off.
refinance with
Or
someone
refinance
else.
with a bank.
Well,
So-
and that's what I've done. Is I've gotten my IRA invested in an 8% first deed of trust. So my IRA is earning 8%, and I'm not paying taxes on it because it's in my IRA.
Right.
No, then that's one of the best ways to grow your self-directed IRA, in my opinion, is to invest in trust deed secured notes.
Yep.
Or if you know how to invest in real estate, of course, invest
No,
in real
mine's
estate.
in a deed to trust, just
Yeah,
like what you
but
said.
if you're looking for passive income that returns a high yield, there aren't many better investment vehicles than a trust deed secured note. So, getting back to the question, if I remember it, was
the interest rates that you
the
charge.
yeah,
and
the interest rates that I
to your
charge
investors.
lenders versus the interest rates that I then give to my lender clients. So there is a spread. And so, for example, if I make a loan to a real estate investor at 10%, which is not an uncommon note rate, oftentimes I will I will offer it to my investors at 9%. Now, that would be a 1% spread, and that is basically what I would sometimes call a servicing spread, because we service the loans. In other words, the borrower is going to pay us, and then we're going to pay our investor, and we pay our investor monthly. So there's a servicing spread, and it averages anywhere from a half a point to 2 points. So it really kind of depends on the nature of the loan, the term of the loan, and whether or not there's variables for every loan. Where's the property located? What kind of borrower is it? Is a high FICO borrower? So we're trying to kind of normalize the yields and the returns that we give out. So it's so let's just say for argument's sake, it's generally a 1% difference.
That's very, very fair.
Yeah.
Yeah, you borrow 10% and you pay your clients 9%.
Well, and the bottom line is I'm a little bit surprised by the spread question, because it's almost really irrelevant to either of my clients, because really my borrower client just wants to know, what's this money going to cost me?
Yeah.
And my lender clients, all they want to know is, hey, do you got any of those great loans? What do you got on your desk now? Is there anything? I've got money. I've got $100,000 I want to put to work. What do you got?
Exactly.
And so, and so for me, it is, part of my business model is obviously, making money on points up front, which the borrower pays, and then making a servicing spread on the note. So, it's essentially my loan that I'm putting together. I'm creating
Sure.
this vehicle, and then I'm offering it at a specific rate to the investor. So whether
Well, you're doing all the hard due diligence ahead of time to see
Yeah.
if it even passes muster with you.
So one of my goals, obviously, over time, is to actually increase the spread that I earn on those notes, because what's happening is, as there's more and more competition among hard money lenders in the Bay Area, and there is, because a lot of money is starting to pay attention to this, this growing industry of private money lending, and so that's driving pricing down. And so I've got more and more borrowers are calling me, going, well, I only want to pay these number of points, not the number of points you're quoting. And so I have to make it up somewhere. So where most of us in the industry are making it up is we're making it up in the yield spread. So we're growing
Sure.
that yield spread. So
Yeah,
again,
and at some point you're getting very, very close to bank rates. So you'd have a lot of good quality loans coming by your way, because it's not that far difference between you and the bank at that point.
well, that's right. And bottom line is if you're an investor out there looking to increase the yield that you earn annually on your savings portfolio, in a zero interest rate environment, 8% is killer. I mean, that is just great.
Yeah, that's a really good rate.
And when someone says, well, can I get 9? It's almost like, really?
Yeah, and that's exactly what you say. Really?
Yeah, what do you get in
So-
a CD?
Okay, now we got one. I've got an email here for Lou, and this person says, I basically I'm going to take the long email and shorten it. Lou, I know that you are a financial advisor. Loved hearing you on the show. What distinguishes you among other financial advisors?
Besides a great head of hair.
Yeah, other than my height, let's see. No, there's a couple things. I tend to be pretty nice to clients I work with, and what I mean by that is I do a lot of work up front for people. People come to me, they have issues. Either they're lost in what they do with their allocation, how they should handle their estate plan, what they should do about retirement, and I'll probably tackle those issues before I engage them as a client, just because I know they come from respected resources where my accountant or attorney told me I got to take care of this stuff. Help me, please.
Oh, okay.
And people, like getting stuff done really quickly. I am mostly a fee-only advisor. I do little transaction work. I don't do a lot of work with products that carry surrender fees or long-term commitments, because people eventually need their money because they can find better investments, like from Mark, or they eventually need money for things like college or retirement.
Yeah.
I do a lot of income investing. The biggest thing is that, when I engage clients, it's more of a, do I want to work with this person? Do they want to work with me? Here's my strategy. This is what I do. This is how you're going to have available to your money. And that's the most important thing. And I try to expand the most for my clients I can when it comes to the returns, expanding their net worth, or controlling their assets as best they can.
Well, I think what's been great having you on the show all this time as a co-host is, you are very intelligent. So, I mean, you're a wealth of resource. It's amazing the kind of stuff that you come up with on the show to expand the financial knowledge, for the listeners. And so I think people can trust you to be able to call you with these great questions.
Right. No, it's, research is 90% of our work, unfortunately. So both of the tax laws like we were talking about earlier, or the outlook in the investment markets, or what's going on.
Okay.
And you said fee only, not feeling.
Yeah.
You said it so fast, I thought.
It's not a massage
Did you just
policy.
say a feeling advisor and a fee
The fee,
only?
what fee only means is we don't usually earn commission on transactions. There are a few where commissions are earned, but for the most part, if someone gives me money, I just charge an asset fee, and I eat all the transaction costs.
Wow.
So it's more or less, again, it's an ongoing commitment where I hope I work with people for a number of years and build up a good relationship, because that's how money's supposed to work. You don't measure it in 3-month time frames, you measure it over 3 years. So that's what I'm trying to do for people. That's not what I do.
Well, that's good. Yeah, you're not
Yeah.
beholden to one company.
Not at all. Never.
Good.
Don't want to be there.
Don't want to be there yet. Okay, we're going to cut to our third and final trivia question. Here is the commercial break trivia question, where the theme is World War I. What event in Sarajevo in 1914 is considered to have started World War I? You guys, you have your eyebrows raised on this one. No one's writing it down. Okay, we might have stumped them. As Lou reaches for the phone,
Log it
quickly
into Google.
log
Log into Google. Here we
Yeah.
go. Google quick. Google quick.
I read about that recently. I was trying to remember the story.
Yeah. Okay,
It's
what
very
event
interesting.
in Sarajevo in 1914 is considered to have started World War I? And we'll be right back. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hunt, Lou Botmall of LPL Financial, America's favorite financial advisor. You like that?
Indeed,
Yes.
I like that tagline.
Because okay, here when we cut to the third commercial break, we asked this trivia question again. The theme is World War I. What event in Sarajevo in 1914 is considered to have started World War I?
I almost had it. It was the killing of Ferdinand.
For the Archduke Ferdinand, the assassination, yes. And I was mentioning off the air that World War II apparently started also in Sarajevo. And Mark made the comment.
Troublemakers.
Troublemakers, yeah.
Can we buy vacation property there?
Probably for 10 cents on the dollar or less. Lou, you have another interesting email there, didn't you?
Right, we got an email, and sometimes you need your head rocked around one way or another to say, hey, get back to the basics. So now that we're in fall and football season, I'm going to get back to the basics of blocking and tackling. And that is that October 15th is another tax deadline for those who extended, and you are allowed to fund certain retirement vehicles up until October 15th. You could start thinking about funding retirement vehicles from now until April 15th of next year. But let's just review the numbers, because they have moved significantly. In here we had Dan earlier who was talking about the estate tax, which has moved several times. Much of that legislation was they changed the limits on tax deferred investing. The big key about tax deferred investing, I've talked about this before, I'm going to bring it up again. When you put money in, you don't pay tax on your income. That can do a couple of things. One is, you put $1 in, you pay less tax, because you make $1, maybe you're taxed 18%, 24%, 36%. You pay
Hike.
less. Yeah, you pay. Nice. You pay less than that. So that's a big, and then also you can lower your taxable income. If you're someone that makes between $60,000 and $80,000 and you lower your income by $5,000, does that bump you down to tax bracket? It's something to look at when you're doing your TurboTax or talk to your CPA about.
Well, when you go back, because the taxes are on a progressive thing, so
Right.
it's only the incremental amount when, because people, when they say, oh, I don't want to make more money because it pushes me into a higher tax bracket, that doesn't really count. It's only the extra $5,000 that gets taxed at a higher.
Right, exactly. So, no, that's a great point. And, but I mean, just think about it real quick. The downside, if there is one, is you can't touch this money until you're 59 and a half.
Well, you can, but there's just a penalty.
Yeah, if you do, you pay a 10% penalty on top of the income taxes on the money you take out in the year you take it out. So if you do lose your employment, people do go into their IRAs, and they do take money out, but theoretically they're not paying as much in taxes because they're not earning as much income.
Isn't there another rule, though, about taking it out over your lifetime or over
There's
5
the
years?
72T rule, which is if you're, I don't recommend it to people who are under 45 or under 50, but you can say, I got a client who retired at 56, and if you say I'm going to take a regular monthly amount from 56 to 59 and a half, you don't get assessed the penalty.
Okay.
But you have to pay the income tax. So,
Sure.
but he's already retired. He doesn't have any other employment, so it works out well. But real quick, let's just go over the basics again. It's fall. It's blocking and tackling season. The 49ers are doing well. We're hoping the Raiders turn it around pretty soon. But
the Giants did very well.
The
yesterday.
Giants did very well. Yes, that
There
was
you go.
Buster Posey is the MVP of all the world right now.
Yeah.
So again, downside the 10% penalty under 59.5. You can fund an IRA, which almost anybody can do with almost any kind of income. Correct? I mean, yeah, I mean $5,000, and if you're over 50 years of age, this is a new provision that George Bush put in. You can put another $1,000 into the plan, so it's a $6,000 tax deferral. Again, that's $6,000 you don't pay tax on and you save for a rainy day. You can invest with other people in the show like Mark. You can invest in bonds, you can invest in equities, you can invest whatever you want with that money, but in the end you don't pay tax on, which is very nice. Then next is 401ks. This has gotten really, I want to say confusing, but the limit's been raised several times over the last few years. Right now, anyone can put up to $17,000 in the 401k. As we get closer to the month of December, December's the deadline for 401k. Some people think it's April, it is not. That's for IRAs. So you can fund an IRA up until April 15th, or your filing date. When it comes to 401ks, you have to fund it by December 31st. I do have clients that defer their last or second to last paycheck if they can afford it in their 401k, which you have to talk to your human resources departments about. It is something that's sponsored through employers. If you hear the term when the government's out there talking about how are we going to change civil servants, they say we're going to get off the defined benefit plan and go into the 401k. That's where you fund it yourself. So under 50 years of age, the limit's $17,000.
Is it a percentage, or you can go up to 17?
Go up to 70,000. If you
So if you
make
make 25,000, you
you
can
can put up
17
17 in, yes.
Oh,
That's what's
awesome.
crazy. If you move up, you make up to 60, you put 17. It doesn't really, there's no limit compared to IRAs. Also, if you're over 50 years of age, you're allowed to put an extra $5,500 on that, which brings you up to $21,500. Yeah. But I mean, $21,500, again, you don't pay any taxes on. I mean, in my opinion, just back of the envelope math, you're saving $8,000 in taxes you're going to give the government.
And
They're
the
gonna
thing is,
spend.
it's not like you're throwing the money away. You still own it.
Yeah, it's yours.
You control
It's-
it.
yeah,
You're
it's-
just controlling it in a tax-deferred vehicle.
Right, it's protected in a trust and all those things. So, outside of that, there's simple IRAs where the limit's $11,500. That's kind of a turnkey 401k program that doesn't require much administration at all. So you're an employer, you have 3 employees, like, what do I want to start a 401k for? That's a headache. Look at a simple. It's a nice option, $11,500. Again, you can defer that
And
much.
the administration costs are probably not too high. On
No,
the
no,
simple one.
they're minimal.
Okay,
Minimal.
and if an employer is listening to this show, they can